Exercise 4-20, we're going to complete a worksheet. So let's review quickly from the chapter what a worksheet is. So this is a completed worksheet for Smart Touch Learning, and the date that they created this is December 31st, so it's the end of the year, and they need to do their financial statements, but before they can do their financial statements, they need to update their accounts with adjustments in the adjustments columns. So what you would do on the job is you would start a spreadsheet. You would list the account names over here. You would probably get these from the chart of accounts. And then for the unadjusted trial balance columns, you would look at the ledger to get the balance, the latest balance for all of your accounts, plug them in here. And then for the adjustments, like we saw in chapter 3, we would figure out what the necessary adjustments are for the accounts to update them so that the balances are correct. And then for the adjusted trial balance, these are the corrected balances. How do we get these? We take the unadjusted trial balance and we either add or subtract the adjustment. For example, for accounts receivable, we had $1,000 before the adjustments. We increased the account by $800, so our new balance is $1,800. So once we get done with the adjusted trial balance columns, we have two new columns, the income statement columns and the balance sheet columns. The income statement columns, we're going to put the accounts that affect the income statement, which means revenues and expenses. So as you can see, we have our revenues here, and then we have all of our expenses. And then what we do is we figure out what the difference is. Revenue, $17,500 minus total expenses of $8,950 gives us net income of $8,550. And then what we do for the balance sheet columns, we take the accounts that are on the balance sheet, which means assets, liabilities, and capital. We add their total debits and credits, and we find out that the difference should be the exact same amount as net income. And then from there, once the worksheet is completed, the accountant would create the income statement, statement of owner's equity, and then the balance sheet. Now remember, these are just, even though they say income statement and balance sheet columns, this is not actually the income statement and this is not actually the balance sheet. So we'd have to do the formal reports that we've done before. And then after that, they would take these adjustments and enter these adjustments into the journal, because remember, this worksheet, which is basically just a spreadsheet, is not the official accounting records. The official accounting records are put into the journal. So let's get started with this. So it says the unadjusted trial balance of data solution and additional information at the end of November follows. So what they've got here is they've got our trial balance, the unadjusted. Now we really don't need this set of data because this set of data has already been plugged into the spreadsheet for us. They of course call it the worksheet. And then we have our adjustment data. This will be critical information that we need to know to create our adjustments. Then it says complete the worksheet, and then how much was net income for November. See what else they say. Enter the adjustments to the adjustments column. No kidding. Key adjusting entries by letter. In other words, when we put accrued revenue in here, we would put the A right here. Then complete the adjusted balance columns for the worksheet. Abbreviations. ACC DEP stands for accumulated depreciation on the equipment. So this is accumulated depreciation on the equipment. And everything else is pretty self-explanatory. So let's start with adjustment A, accrued service revenue. And for the millionth time, accrued means something is accumulated but is not yet paid. So what has accumulated? Revenue. And because it hasn't been paid, this means the customers owe us this amount. But let's record the revenue first. So revenue is increasing. How do we increase the revenue? With a credit. So down here under revenue, service revenue, I'm going to put in $800, adjustment A. And then remember, because it says accrued, it means it has not been paid yet. So we've performed some service, but our customers have not paid us That means they owe us. That means we need to increase accounts receivable, which is an asset, and assets increased with a debit. So always double check for each of these adjustments. You need to have a debit and a credit that is the same. Next, we've got depreciation. So we don't have to calculate the depreciation in this problem. The authors were nice to us. So we just need to plug in the $350 of depreciation. So depreciation creates a depreciation expense. How do we increase an expense? With a debit. So for depreciation under the debit, I'm going to put $350. Adjustment B. So what is the other account? Whenever we record depreciation, it's accumulated depreciation. And how does accumulated depreciation increase? Because that's all it does, is it accumulates. It increases with a credit. So I'm going to find accumulated depreciation right here. $350 credit, adjustment B. Next, we've got accrued salaries expense. So accrued means the salaries have accrued, they've accumulated, but have not yet been paid. So because they've not yet been paid, we owe these salaries to our employees, which means we need to increase the liability. How do we increase the liability? With a credit. So I'm going to find salaries payable right here. $650 credit because it's increasing, adjustment C. And then we have to record salaries expense for the same amount, $650, adjustment C. Then we have prepaid rent that has expired. In other words, it has used up. So we find prepaid rent. Now this is key. We had $1,800 of prepaid rent before this, but it says that $700 of it has expired. So we need to lower the prepaid rent by $700. How do you lower an asset? With a credit. So I'm going to find prepaid rent. I'm going to lower it by $700. That is adjustment D. Then we need to increase the expense for rent. How do we increase an expense? With a debit. So I'm going to debit rent expense for $700. Adjustment D. And then office supplies used. Now this is really critical that you pay attention to this word used. So this is not the new balance. This is telling us how much was used. So we need to lower the office supplies account by $550. So office supplies is right here. We had $3,100. So it's an asset. How do you lower an asset? With a credit. So I'm going to lower that account by $550, adjustment E. And then we need to increase the expense account. That shows that we have used supplies, and that's supplies expense, $550, adjustment E. So now I'm going to double check this. Everything looks good. I have a debit and a credit for each one of them, and I've got all my letters in there, identifying them in case we ever have to come back to this and troubleshoot it. So now what we're going to do is we're going to add up all of our debits, 800, 350, 650, 700, and 550. That gives us 3050, and then we add up our credits, and we also get 3050. Excellent. So we don't need the adjustment data anymore. Now what we're going to do is we're just going to update our adjusted trial balance columns. So to do that, I might use this as a block so I can kind of see stuff. Let's see if it lets me make it bigger. That's good enough. All right, so we got $4,400 cash. Cash is never adjusted, so the balance is still the same. Then we've got AR, 3,100. It was increased by 800. That gives us 3,900. Then we've got prepaid rent. We had 1,800. 700 of it was used up. Remember, it expired. So we're going to take 1,800 minus 700, because remember, credit for an asset lowers it. and that gives us a new balance of 1,100. Then we got office supplies, 3,100, and 550 was used. So notice a credit is lowering the office supplies account. So 3,100 minus 550 gives us what? 2,550. And then equipment is not adjusted, so it's the same balance. Accumulated depreciation, we had 1,500. We increased it by 350, so that gives us 1,850. Now make sure you put this on the credit side. Notice this is a credit. Accumulated depreciation has a plus sign on the right side. That means its normal balance is on the right side. And then we've got AP, which was not adjusted, so we still have 5,100. We had salaries payable at 0. Increase it by 650, gives us a new balance of 650. Capital is not adjusted. Withdrawals is not adjusted. Make sure you put this as a debit. We had $8,800 of service revenue. We increase it by 800, so that gives us 9,600. Then we had 0 depreciation expense. We increase it by 350. Now this is tricky. Make sure you put it on the correct side. I almost put it on the credit side. All expenses are always on the left side. 2,100 plus 650 gives us 2,750 of salaries expense. We had 0 rent expense. We increased it by 700. We had utilities expense. We did not adjust it. And then we have $550 of supply expense. Now what I recommend you do is just double check that your balances are on the correct side. Here's your assets. So assets should always have a balance on the debit side. Here's our contra revenue. It should always have a balance on the right side. And all liabilities, which is AP and salaries payable, should have a balance on the right side. Same with capital, right side. Then draws, left side. Revenues, right side. And then expenses on the left side. Now what we're going to do is we're going to add up all of our debits, and we get a total of 50,100. We add up all of our credits, and we get the same amount. Now, what I wish Pearson's the publisher of my accounting lab, I wish they just put these next set of columns right here, but for some reason they shift it down. Now if you don't want to scroll up to see the prior balances, you can just click here and see it that way. For me, I'm not going to do that. On the test, it's not going to give you this link because then that would be the solution. So you're going to have to scroll up here to get your balances. So again, let's review what we're doing for the for the income statement columns. So we've just completed the adjusted trial balance. So now we need to finish or complete the income statement columns. So what goes on the income statement? Hopefully you have this memorized by now. It's revenues and expenses. And then you subtract the two, you get net income or net loss. So what we need to do is find our revenues and expenses towards the bottom, and just right here, find our revenues and expenses towards the bottom, and then just shift them over into the income statement columns. So that's what we're going to do now. So I'm going to go up here to my adjusted trial balance, find the revenues right here and expenses, and then just copy this data down to the income statement columns. So revenue is 9,600. Make sure you put it on the correct side. Depreciation expense is 350. Salaries expense 2750. $700 for rent expense, $700 for utilities expense, and then $550 for supplies expense. Now, should this balance? No. It's going to be very rare that your revenues are going to equal your expenses exactly. That would be a break even. That almost never happens. It could happen, but it's very unlikely. So now getting back to our example that we're working with, notice there's a line here. That means we're doing some mathematical operation, which just means in this case we're adding up all the expenses, adding up all the revenues, and then putting them underneath this line. So when we add up our, I'll do the easy one first, add up our revenues, we get $9,600. So notice here's that line, so we're putting the sum, in other words the total, down below the line. Then we're going to add up 350 plus 2750 plus 700 plus 700 plus 550 gives us, notice here's a line, so I'm putting the total here, 5050. So now, do these balance? No. So what we're going to do, we're going to calculate either the net income or the net loss and then put it on the smaller side, because the goal with the worksheet is to get both sets of columns to balance. So what's 9,600 minus 5050 gives us a net income of 4,550. Again, why am I putting it on the smaller side? Because we then want to add 5050 plus 4550 to get 9,600. And then we have 9,600 here by adding up these two. So our goal is to get both sets of columns to balance. So nice. This company has a net income of 4,550. Again, how do we get that? 9,600 revenue minus 5050. So don't forget your balance, or don't forget your financial statement formulas. Revenues minus expenses equals net income. And our two sets of columns balances, so we're good to go. Then we have to figure out, well, what goes on the balance sheet columns? So the formula for your balance sheet is assets equals liabilities plus ending capital. So we're going to move over all the assets and the contra assets, move over the liability, and move over the capital, which includes the drawing account. So let's move over all of our assets to the balance sheet columns. So we've got, and make sure you're getting it from the adjusted trial balance columns. So we got 4,400 for cash. AR is 3,900. Prepaid rent is 1,100. Office supplies is 2,550. Equipment is 30,200. And then we have to bring over the contra asset, 1850. Oops. I tried to do Control V and I pressed to paste it and I actually hit V. So our equipment was 30,200. There we go. And then we need to bring over our liabilities, which is 5,100 for accounts payable, $650 for salaries payable, and then what else goes on the balance sheet? The capital account and also the drawing account. So 32,900 for capital, 2,900 for draws. Don't forget to put it on the debit side. So really what we're doing, let me get back to our example here, is on the adjusted trial balance set of columns, we're moving every single account balance over to either the income statement columns or the balance sheet columns. Notice none of these accounts appear in both the income statement and balance sheet columns. So basically what you're doing is you're just shifting revenues and expenses over the income statement columns, and then everything else goes to the balance sheet columns. So now let me double check this to see if it looks good. Okay, so far so good. So here's our horizontal line, which means we're doing a mathematical operation, which means in this case we're adding all the debits and putting the total here, 45,050, adding up all the credits. They should not balance, by the way, 4,500. There you go. And then we're going to see what the difference is. So 45,050 minus 40,500 gives us this same amount. It should always be the amount of net income. And then because we want these columns to balance, we want to put this on the smaller side. So again, 45,050 minus 40,500 gives us a difference of 4550, which should be the same as net income. And then we're just going to add 45,050 plus 0 gives us the same number. And then 40,500 plus 4550 gives us this number. Check our answer. Excellent. So one thing that confuses students a lot is which side does the net income go on? So one reason, or one way to remember it is, remember both of these balances, both of these totals should balance. And the only way you can get it to balance is to put either the net income or the net loss on the smaller side. And since this is a net income, how do we know this is a net income? Because revenues is larger than expenses. So this is a net income, not a net loss. A way to remember which side it goes on over here on the balance sheet set of columns is there's two ways. One is you need to put it on the smaller side so that both columns balance. The other way to remember which side net income goes on is how does net income affect capital? Net income increases capital, and how do you increase capital? With a credit. So that's another way to remember which side this net income goes on. Because it increases capital, you're going to put it on the same side that increases capital. And then finally, net income for November was what? Well, we already calculated here, $4,550. Again, how do we know that's a net income and not a net loss? Because revenues, $9,600, is greater than expenses. And that's it.